Good morning, traders. This is Michael coming to you from Game Edge on Tuesday, August 19th with our pre-market prep session. As always here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend, and then we'll go through some single stocks that are currently at some key levels pre-market. As always here, you can join us at gammaedge.us. Head to our newsletter tab here, sign up for our education strategy weekly newsletter. We've produced 20 to 25 newsletters already this year on various topics, including how we approach the markets, SPX option structure, and how to trade and look at our tools. So put your email in here and you'll be taken and you'll get those newsletters free on the weekend. Also, you can check out our free courses, free education. This is a Gamma Edge Fast Pass. This is our flagship education course. Again, covers a significant amount of topics, including our tools, our thesis, how we look at the SPX option structure and navigate that to our benefit. You can sign up for the two other courses down here. Also, the School of Options free course, as well as the mental side of trading. Again, those will be delivered right to your inbox, and you can click and go through those individually. As always, you can join us in our Discord. Click the pricing tab. You'll be taken to the Watt portal to be able to enter that. You can sign up, 7-day free trial, all the tools turned on. Again, great trading community with traders of varying abilities and experiences, new to money managers and larger market participants. So let's jump right into it. Market trend model, as always, we start with the trend. Consolidation sideways for the past few days. Our market trend model is based on the tick index and gets you orientated. We want to look at the bolded white CT. That's our intraday or instantaneous CT that we look at if you're a 0DTE trader. And then our long R look back period is this colored ribbon, red above cyan with a positive slope, indicates that buyers are still in control of the overall market on a longer trend. And then our intermediate or shorter trend is the bolded CT, as well as the short-term moving averages we use for momentum. So yesterday, just a very low volume day, as you see here with our breadth indicator, new highs versus new lows. New highs just barely outpaced new lows, but volume was extremely low. You see the filter tick indicator. This is plus 1,000, minus 1,000. These are larger institutional block orders. You see we're just barely below the zero line at negative 4,000. So really institutions non-participating yesterday. And then our cumulative tick just hovering around the zero line back and forth and finish slightly negative. So we'll start the day in a slightly negative cautionary stance from the tick US. This is all exchanges, a little bit more noisy, but we like to include all the regional exchanges. And then we move on to our quality filter tick. This is how we base our mechanical portfolio, P-trans to PGEX. I posted an update over the weekend about closing positions. We closed UNH for an 18% win yesterday, which was a great win. And we saw that option structure changing before the Buffett news, which was pretty awesome with our tools. So come join us and we'll show you how we catch these, look at these stocks and watch the structure change before either significant news events come out or market participants really start speculating to the upside. So again, bolded CT below our short-term moving averages and momentum here. Key is we need to see it get back above these short-term moving averages for a bullish look and start moving to the upside. If we're below those moving averages, will be a little bit more cautionary and possible look for the downside towards the colored ribbon. Longer look back period, again, fold to the upside, positive slope, red above cyan. So mechanical portfolio is on. Again, so a longer look back, market participants are continuing with the upside speculation. Again, we just want to make sure that if you're going long the overall market, at least on a short-term or intermediate trend, the bolded CT is crossing above those moving averages to the upside. Heading on to the SPXA, this is our cruise ship. Obviously, this is institutional positioning. You see by the expiries over here in our web app. Obviously, these are monthly expiries. Transition area here. We like to stay above these transition areas to look a little bit more bullish. Again, we've noticed that we've seen some in-money puts being exposed overhead. Again, not necessarily a red flag, but just noticing that some of those out-of-the-money calls may have eroded away a little bit. So we'll keep an eye on this. 6,500 to the upside, 6,600, PGEX up there. Again, these transition levels, utmost importance for bulls to stay above on the longer look back, longer expiries, with the monthly. Call dominated above below spot price, so nothing really to worry about there. Bullish look overall. Heading into the SPXA September expiry, again, call dominated above and below spot price. Really watching this transition level for us to stay above. Again, that would be a little bit more bullish. You see green net delta in the money calls above and below, so really nothing to worry about here. Again, any pullback should be an opportunity to get involved in the overall market unless we see an erosion of this overall structure and we're seeing a significant change from call dominated to put dominated. Moving on the SPXP, again, all expiries turned on in our web app. Quickly and easily you can click through these tiles to look how the structure is advancing or declining. Quick takeaway here is we are call dominated above and below spot price. Some other commentary here, you can pause your player. 48% of the SPX complex vaporizes this week, so where that money goes heading into the September OPEX will be important and positioning wise. Again, right below spot price, we've talked about this before, we see some out of the money put speculation. Again, this could be a short-term phenomenon as speculators looking for a short-term pullback in the overall market, and they capitalize again on that pullback very quickly as these out of the money puts will become in the money, and then we see some sort of monetization. So again, green net delta to the upside, obviously the JPM short strike here, so speculation still in control. PGEX 6,500, COI 6,500, that's the highest call open interest, so that would be that first kind of area that we'd look for price to head up towards. And then to the downside, we see 6,400 is now our index level. So again, we would look for that to be supportive. Below 6,400 would be a little bit more risk off. But again, you see in the money calls below us, and then again, this short-term out of the money put speculation. And you'll notice this on two other tools that we'll just discuss here in a few minutes. Moving on, the SPXP GEX ratio, again, put call ratio where we add a time component, which is gamma. You'll notice the first thing you'll notice right here is the declining red dotted line. Obviously, this is the put call ratio declining. So what does this mean? Basically, that means the out of the money call speculation is starting to decline. So we see a negative slope here. Again, not necessarily a significant amount of put speculation to the downside, but it's just a divergence from price to the upside consolidation, and the out of the money call speculation continuing to drop. Staying above 1 is still bullish, again, as we've discussed multiple times here. So we'll continue to keep an eye on this. If we continue to see this drop to the downside, one of two things will happen. Spot price will come down to meet this overall change in structure, which would be the out of the money call speculation continuing to decline, or we'll see this turn back to the upside, and we'll see the out of the money call speculation come in, overriding that out of the money put speculation, as well as the in the money puts above us, and we'll see a price appreciation to the upside. So as of now, slight divergence, negative slope on the GEX ratio, just indicating again that out of the money call speculation starting to dry up a little bit. Moving on the SPXP delta balance, so you'll really get to see that out of the money call speculation drop, or in the money and out of the money put speculation that I just discussed. So green dotted line is the right hand plane, that's the out of the money call speculation. Again, flat to slightly negative. We see the delta balance dropping from 1, and then the left-hand plane, which is below spot price, this is what I discussed, those out-of-the-money puts really starting to come up under spot price, and some hedging to the downside, and that's why we see that drop in the left-hand plane below us. So what would we want to see? We'd want to see this left-hand plane stabilize. Those out-of-the-money put speculators, if they become in the money and price drops, take some profit and monetization, and you'll see this line start going back to the upside as those out of the money puts become in the money, and we see monetization. If we see that right hand plane start to drop also, sorry about that, these are interactive charts there. If we see that right hand plane start to drop to the downside and negative, again, that would indicate out of the money put speculation is closing and eroding, and those would expose those in the money puts, and we start to see both of these lines slope to the downside as well as the delta balance. So on out in time, we see a short term bounce back heading into the 20th as well as the 22nd, but then we see a dropping as we head into the 25th. So you see the delta balance drop, that left-hand plane spot price continue to drop. That's that out of the money put speculation. And then you see the right-hand plane actually start to appreciate though. So again, we'll watch this, a divergence of the right-hand plane and left-hand plane. We'll continue to watch and see which one will win the battle. But delta balance dropping below 0 is not necessarily bullish, as well as the left-hand plane dropping below 0. So a feather in our cap, just a slight yellow flag for price appreciation. Again, we'll continue to watch this day over day, match this with our OI change, our intraday volumetrics, as well as our market trend model, so sentiment, structure, and trend. Moving on the SPXP net stat command, highest sensitivity, you'll notice that this left-hand plane continues to drop a little bit as we see in the money calls now all the way down at 6,000. Again, that's its highest sensitivity strike, really due to those left-hand plane dropping, as I just discussed on this red dotted line here. And then you'll see the highest sensitivity levels: net gamma 6435, net charm 6400, and then Vanna here. Right-hand plane out of the money calls 6500. You'll notice the net charm 6465, again 6460, and then that Vanna is all the way up at 6600. So not really consequential at the moment. So again, this area to the upside will be difficult to get over today, as out of the money calls, this charm will continue to grow. And then we see that 6,500 strike of those out of the money calls pretty far advanced from where we are pre-market. All right, let's move on to the SPX P0 DTE. Again, this was the structure we'll have to navigate today. Possible long IC at 2,000 contracts. We really don't want to get wrapped around the axle. That's a very weak IC, not really like the 10,000 or 30,000 that we usually see. So again, may exert some force, but you also notice that it matches in a confluence of drunken sailor range, which a lot of people have commented already this morning, as well as Daniel, that our drunken sailor range is very accurate. And again, that's just the structure that we monitor and look at every day. Again, low exposure area, you will be at the winds, or the you'll be a boat kind of out on the ocean with the intraday volumetrics. So as market participants transact within this overall structure here, that's kind of how price will go. And yesterday we really saw that price contain. You notice the expected move today is 0.45% or 29 points, so very low. Again, very narrow range. You'll notice the PGEX and or the GEX transition, as well as the gamma transition. GEX and DEX transition here, very narrow, also at 64.50, 64.55. So again, we want to be above that to be bullish, but you'll notice the top of the drunken sailor range. So we could be contained between the 64.35, 64.65. That's roughly 30 points. That matches our expected move here, back and forth. So we'll continue to watch this. Maybe extremely choppy today, and again, we'll be at the mercy of the intraday volumetrics. Again, if the volume is still very low today, as we were monitoring yesterday, we'll just be bouncing back and forth and really with no direction. Which gives a great opportunity to put some option structure trades on. We had multiple members yesterday that capitalized on that very low volume, contained price action between the two goalposts, and we're able to capitalize on those trades. So again, long above 64.65, price appreciation up towards 6,500. Below the drunken sailor range, we'd be a little bit more cautious and short, down towards 6,400. But within this overall DS range, as well as the goalpost of the low OI weak IC, we may just continue to chop around consolidation for the day. So we'll continue to watch that, and we'll watch our vol M command. We posted that yesterday, that our chopsticks were crossed pretty much all day. Again, centroids were not really showing any significant movement. Again, so that is a quick indication that we're most likely going to see a consolidation day via our vol M command. So that's really a great tool that we use intraday that you can check out when you join us. So again, join us at gameedge.us. Sign up, newsletter, come to our Discord. Let's go over some single stocks as well as our intraday game plan today. So DS range here, transition outlined, DEX and GEX transition. So if we're below that, we'd be a little bit more cautionary and bearish for a move down towards the bottom of DS, 64.35. If we're above transition, again, we'd be looking for 64.65, and we discussed those high sensitivity levels from gamma and delta to the upside. We'll check out a few stocks here. We already see AMD this morning, P-Trans there, zero GEX there, so we'd want to stay at least above zero GEX for a long to the upside. Already interacting with P-Trans, Apple, P-Trans at 230. Again, staying above that will be important for the bulls for the upside. Alphabet below P-Trans, Google below P-Trans. We see zero GEX below us, really in the middle of no man's land there pre-market. Meta 765, important to get above if we're going to see some upside. Tesla 335, P-Trans, important to get above, staying above N-Trans and zero GEX. Possibility for a long there on a pullback. Nvidia plus GEX 185, we see COTMP. This is many times we see a monetization there of out of the money puts become in the money. And then we see P-Trans 178. So really kind of a wet sponge area that we'd want to watch on a pullback on Nvidia. Let's move on to Amazon. 230 there, P-Trans. Mark those levels, pull back there. We see Microsoft above all the levels, Robinhood above all the levels. Uber yesterday was a very nice trade. We posted this and we're discussing all day long. I went live midday. Make sure you check out that midday review. We had a pullback right to P-Trans at 92. Great opportunity to get involved. Long side ran all the way up to close to 94. So $2 move off of that key gamma delta level that we watch and provide opportunities on pullbacks to get involved as long as the structure as well as the market trend model is constructive. You can see Intel there. I threw that one up this morning. Obviously, some news of SoftBank infusion or taking a stake in it. So you see PGX. It's what is interesting is PGX is actually plus or at 25. Historically, that's an area from our P-Trans to PGX portfolio where we see profit taking and where we take profit. And you see what's happening already pre-market. Ran right up towards 25 and a pullback. So again, this is going to be a key area for Intel to get over this morning. 25, and then you have COTMC up here. Out of the money calls become in the money, usually a monetization area. So Intel may be difficult to move to the upside above that 25 level, as you saw actually spiked yesterday at 1222 and ran right into that area overhead on Friday, August 15th at 25 and pulled back. So you see how this confluence of levels really across multiple days of the structure not advancing. So what you'd want to see in Intel is you'd want to see this PGX continue to move higher, as well as the COI. It's up there at 30, highest call open interest, but you'd want to see this PGX advance to 27, 28, indicating how the money call speculation is coming in and the overall structure is advancing. And obviously that would most likely be met with price appreciation. But if the structure is not advancing, then that's indicative of out of the money call speculation not occurring by market participants, so they're not speculating at higher prices. So again, spot price or price rarely goes where options are not. So again, out of the money call speculation, I'm opening out of the money calls, positive delta on my book gets longer, dealer's book gets shorter, dealer or market maker, and they have to hedge flat. So they have to buy at least the underlying or some other entity or structure that they're using for hedging. So Intel, watch 25 today, really be an important level to get above. So, all right, thanks everybody for joining us. Anybody has any questions, I'll stick around for a couple more minutes. SPY this morning already, testing that P-Trans as well as 0GEX level as well as N-Trans. Make sure you are monitoring those two levels. Utmost importance, as well as our drunken sailor range and our overall transition levels heading into this morning. So yeah, Mr. Hedge Fund, Uber was a very nice trade yesterday. I think a couple of our members were able to take that trade, but we provide that those scans in the morning, our P-Trans scans of stocks that are at or crossing, and you can run those commands intraday also to get an idea of those stocks that are crossing those key transition levels, moving from a more neutral to call dominated positive gamma state where we can see price appreciate higher within that overall structure. So, all right, thanks everybody. Make it a great day. I'm not sure if we'll do a midday review, but follow us on X as well as YouTube. As they always say, hit that smash button, like and subscribe, and you'll be notified anytime we go live or post content. I think that's key because we'll post when we're going live, try to post at least 30 minutes before, so you'll be able to join us on YouTube. If we do a midday review live, you can ask questions, and if you want to see any single stocks midday, we can pull those up on our web app and show everybody. So, all right, thanks everybody. Make it a great day.